if you go through that planning process and you identify those risks, most of them can be mitigated. And those that can't, it's one of those things. What is your plan for those risks that can't be?
If you fail to plan, you plan to fail. Most of us have heard that, but has that really sunk in? Have you taken that to your business and really put time into planning? And we oftentimes get busy with the busy work. It could be emails, phone calls, texting, whatever it may be. Those things are busy, and it helps us to feel productive oftentimes. However, it's oftentimes not the best use or highest value of our time potentially. And planning is so important. And even planning for growth. We all want to grow our businesses, in real estate as fast as we can, as big as we can, typically. But if you do not plan, and I'm not sure which direction you're planning to go, right? You're not planning. So our guest today, military background, I'm so grateful for his service and to know him and his team. They have grown so fast. He's been on the show numerous times. You'll hear me talk about that. But Scott Lewis, he's a co-founder and chief executive officer of Spartan Investment Group. As a CEO, Scott is responsible for the strategic direction of the company and ensuring it aligns with their mission to improve the lives through real estate. Prior to Spartan, Scott held positions as a regional sales manager for a biotech firm and various positions in strategic and project management for the federal government, accumulating at the GS-15 level, and was on active duty in the U.S. Army as an infantry officer. So Scott's been on the show numerous times. We talked about how the military has shaped him. And today we didn't talk about military specifically. However, it did help push him in the desire to plan and knowing the importance of planning. You're going to hear that today. You're also going to hear meeting cadences and how they structure specific meetings inside of Spartan. I mean, I've known this team for 5+ years now or more. And it's been incredible to see their growth. And I know that's because they have planned well. They have incredible processes. They write these things down. They're consistently improving. They have over 100 employees now. And he's going to go through and how do they communicate with all these people, right? What system do they use? And how often? And even some of the things around weekly meetings that are going to help you to have a more productive meeting and keep it short. Scott Lewis, always a pleasure to catch up with you. Welcome back to the show.
Good morning, Whitney. Thank you again.
Yeah. We were joking because Scott's wearing a vest and I'm wearing a short sleeve shirt. I mean, he's in Colorado. He's talking about snow one day, 80 degrees the next. I don't think I could get used to that kind of weather.
That's why it's a vest. Got a little warmth in the chest, nothing on the sleeves. Kind of keeps you open for whatever's coming your way.
That's right. Well, Scott, it's always a pleasure, like I said. And so, I've enjoyed watching just Spartan's growth over the last number of years. I was looking back. And, you were show number 20, and, now you're 1,300, and this is 1317, I think, or around there. And so it's interesting to see, where you and the business, the team has come over the last 4 or 5 years. And it's so impressive. And we're going to jump in today to some of the things that has helped condition you for that growth, right? In your team and what is behind some of that. Because I know you've learned a lot probably over the last 4 or 5 years as well. And honestly, we just want to learn from your mistakes so we don't make the same ones, right? So I'm grateful to have you on the show because the listeners need to listen up, and you just love your background, the military discipline, and how you all have incorporated that in your teams as well. We did a show on that also. And I would encourage the listeners to go back to show 20, 185 and 566. 566 was specifically about using military planning to navigate difficult times in our business. So, but Scott, welcome back. Let's jump right in and let's think about, the planning that needs to be done to condition our businesses for growth. And let's talk about how you all have done that well, or maybe some lessons learned also.
It's one of those things that nobody likes planning. I have yet to run into somebody other than my crazy self that likes to plan. And it's one of those things that is so pivotal in mitigating risk, because that's what this really is about. When you look at growing, there's the adage that you can grow too fast and topple over. So that's definitely true. However, if you think through kind of like what's going to happen, and we'll talk about a technique called the pre-mortem at some point in the next 30 minutes or so, that can really be used to identify like, hey, where are my risks? So if you go through that planning process and you identify those risks, most of them can be mitigated. And those that can't, it's one of those things. What is your plan for those risks that can't be mitigated? If you're just starting out and you're growing a business and you're in hyper growth, the self-awareness to know that you have no idea what the heck you're doing, right? Regardless of what the experience is a really powerful tool to accept the fact that there are things that are outside your control. And how do you put things in place to mitigate those risks that you can't see coming? That could be corporate killers. We can dig into that a little bit too.
Yeah. I don't want to forget about the technique you were talking about, and maybe we talk about that in a minute. But I also want to think about, you mentioned, the plan for things that cannot be mitigated, those risks, which there's just always things that we can't see that are coming, like a pandemic, right? Nobody would have guessed something like that. But then also the things that are just outside of your control, like that. So, but what's the technique you were talking about?
Yeah, let's jump into it. So, I'll start with a quote and then walk into what's called a pre-mortem. So Eisenhower said, in preparing for battle, I generally find that plans are useless, but planning is indispensable. And what he was getting at is, we all know that no plan survives first contact. When you actually get out there and you actually start executing whatever it is you're doing, whether it's real estate or gardening or a dog kennel, the operating environment is always going to act against you. The civilian term for that is Murphy's Law. The military term is the fog of war. So when you look at those two things, what can you do? What can you do to stick Murphy in a cage and to reduce the fog of war? Where there's a technique called a pre-mortem. A good number of people are going to be familiar with the post-mortem or the after-action review. It's basically a look back and said, hey, we did this. Here was the outcome. What did we do well? What did we do poorly? What can we learn from this, right? Well, that's after failure happens. So there's another technique that's called the pre-mortem before you start anything. And this can be used in your business. This can be used going to the grocery store. It may be a bit overkill to do that, but could mitigate the risk of you going in there and coming out with all manner of ice cream and frozen pizzas instead of broccoli and like cucumbers, right? Like we do that. We make a list, because otherwise we make a list and we don't go to the grocery store hungry. Two things that could cause massive failure walking out of King Soopers. Been there. So what the pre-mortem does is you start by listing out the failures. We're looking forward. Like potential failures? Say again? Like potential failures? Absolutely. But look at it from the perspective that the project has completed and you failed in this particular way. I don't know. Talk about a vacation, right? And the potential failure is we showed up and we had no place to stay. Okay, so what can we do about that? What can we do to mitigate that risk? Well, let's book a hotel in advance. Let's make sure that we get ahead of it. Okay, why did it fail? So it failed because we didn't book a hotel in advance. Okay, cool. So what can we do? Well, we can book a hotel in advance. The key then, the next step, the fourth step is very, very key. It needs to be assigned to somebody. So I'll give you this exact instance. So I'm a part of a smaller mastermind and it's just 4 of us. We're on our own. There's no bigger, higher headquarters. So we're logistically challenged. So we pick a city in which we all go to. Long story short, going to Boston tomorrow, get a text yesterday. Hey, did anybody book the hotel? No, they did not. The hotel we chose sold out. So we got lucky that somebody sent the text, hey, what are we doing with this? Otherwise, we would have shown up, walked into the hotel thinking somebody else did it, and no one did it. But the failure came, the potential failure, we mitigated it because we caught it, but the failure would have come from a lack of assigning that. So kind of just recap for your listeners, what is the failure? Why did it happen? How do you mitigate it? Who's responsible for those mitigation actions? And you do that right up front before you start anything. And I don't know, I'm just guessing here, probably 85% of the potential failures you can probably identify up front. And those rest of those 15%, I want to talk about that. But the end of that process is called the pre-mortem that you can go out and research.
When are you all doing that? Like, and who's involved in that process? What team members? How do you think about that and just the timing? Or, is this like, okay, we're fixing to start this new thing or maybe a new deal or a new process internally? Like what do you apply this to? I know we talked about how it can be applied to anything, but like maybe some specific examples inside your business.
Yeah. So you hit it right on the head. The best time to do a pre-mortem is when you're going after something new. If it's your standard due diligence process, it's your standard due diligence process. So if you're buying another 250 multifamily or another storage facility, like, okay, there's a process for this. But if you're going in and you're developing a project in a new jurisdiction, okay, maybe that's a time to kick this off. Or if you're launching a new service, say you're building your company and I don't know, you want to offer property management services as a third party. That's a good time to do it whenever you're doing something new that you're unaware of or that is an unfamiliar environment. The other, as far as who does it, it depends. At what level of the organization are you committing strategic resources? Well, then it's probably your leadership team all the way down. Is it internal to the team? Is the finance department kicking the tires on a new way, on a new set of books or something? Well, I probably don't have to be in that meeting, but our finance team should probably be in there. So it really depends at what level is the project kicking off at in the organization.
Okay. No, that's helpful. That is helpful. It's planning, right? I mean, it is planning, but being so intentional in thinking through, man, what could happen and how are we going to respond? But I like how you said, it's like it already happened. Well, then, okay. I love the example of, well, we don't have a room. Well, okay, we can fix that. Right. But then the assignment, it's so important. It's like somebody's choking, right? It's like, if you don't know what to do, you point to somebody and say, call 911, like you.
That's right.
You don't just yell it out there because nobody knows for sure if they should do it or not. Yep. Like you point at someone and you assign that thing and then they're responsible. I mean, like they know they've been assigned to do that thing, whatever it is. No doubt about it. Okay. Let's move forward.
Yeah, let's talk about a saying, right? Failing to plan is planning to fail, right? We've all heard that. Right. Well, if you haven't, then you're welcome. So let's talk about why people fail to plan. Whitney, you and I were Army dudes. Planning or not planning isn't a thing. Why? Because we make mistakes. We don't come home. Our soldiers don't come home. But in most people's world, what class did you take in college that taught you how to plan? Most people don't. Like maybe if you did a master's degree, you took a strategic planning class, but that's at a strategic level. That's about talking about very, very high level. We don't get much education or training on how to actually build a plan, which for most of us, we're not a huge fan of doing something that we have no idea what to do. But I'll encourage the listeners that if you take a crayon and you go over to a wall and you write some notes on that wall, for your plan, if your business plan literally is crayon on a wall, that might be the 20% solution, but that's going to be better than just starting. Most people, when something new comes in, they're super excited and there's nothing to get started. And there's nothing sexy about planning whatsoever. Hurts your brain, takes a lot of time. The only results it produces immediately is a piece of paper generally, or an ideology that you share across your organization. So it's not sexy. You can't show your buddies down at the country club your plan because nobody cares. They're not going to read it other than you. So most people don't want to do it because it's not sexy. Most people then end up failing. 9 out of 10 businesses fail, period. And a big part of it that people think is because it's undercapitalized. I disagree. Don't get me wrong. Failing to capitalize your business correctly will make you make bad decisions. But generally, those decisions come because you don't have a plan. So when tough times come, you have nothing to fall back on to tell you what to do. So you make a decision in the moment that turns out to be stupid. So if you've gone through that planning, even if your plan goes to heck in a handbasket, you've still had all of the experience of planning. And that experience, 50% of it, 60% of it, 30% of it will be thrown away and won't make it into the final plan, but it's still there. So that when you get out there and you start doing what you're trying to do and it turns out to be wrong, you still have some experience to fall back on and kind of adjust course and pick a different direction. In the military, we have a saying, start moving. It's better than standing still, because even the wrong direction will give you experience that you can adjust that direction later.
Love that. No doubt about it.
Are you about to start a podcast or producing a podcast and tired of doing the editing yourself? We have produced over 1,000 daily shows, and the production team that I've created, they're now available to produce shows for you as well. We can do as little or as much as you need, from finding and communicating with guests, preparing introductions, to editing the audio and video. You will sound better, have a more professional presence, and be able to spend your time doing other valuable tasks on your business. Let me know you're interested by emailing me directly at whitney@lifebridgecapital.com.
I try to tell my boys all the time, like, no decision is still a decision.
That's right. It is.
No doubt about it. So, I was thinking through this in our businesses as well as we plan. How often would you say, you or your team, completes this task or this process and then determins, what this is probably, we don't want to do this at all, right? Like when things come up, or, your business partner or somebody else in the department says, or business says, hey, what about this thing? And it's like, oh my goodness, you thought of that. And so how often would you say that happens?
It hasn't been very often. We've done some adjustments, trying to think of anything we've just outright scrapped. We've delayed, our strategic plan calls for 3 asset classes, and we've delayed. Yes, we have RV parks, and yes, we have all manner of stuff that's come in with these storage portfolios that we're buying, but it's not a focus. It's more tangential than anything. We've delayed offering external services. That's probably one of them that it comes to mind the most. We've been talking about offering external services for 5 years, and we've consumed all of our own internal services such that we have no time. So we've kind of scrapped that and just saying, hey, we're not doing that, just because our team is overworked as it is, trying to just service our own internal stuff versus trying to go and help somebody else outside of Spartan. But it's not very often. If you really put some thought into your plan and you don't come at it half-cocked, and you really understand your operating environment and you understand your mission, vision, and values, those 3 things will really guide a plan, very much so. And not allow you to, I guess I'm not going to say it won't allow you to get distracted by the shiny object syndrome, but most people get distracted by that because they haven't written the plan, and then they get impatient. It takes a long time to execute a plan. So kind of going back, when you're looking at it, if you're looking at the strategic level of your organization, the 30,000, 40,000 foot view, that plan should be a couple of years. And it should be big enough, maybe not your big, hairy, audacious goal if you're a Jim Collins fan, but definitely a 3-year goal that should take some real effort to achieve. And don't abandon that just because you didn't do it tomorrow.
I know that you all have, you've implemented numerous things internally that have helped you all maybe do some structuring to even help you to plan, right? Or help you to work together better, more efficiently. The listeners are going to be familiar, with EOS, traction, scaling up, some of those things. I know you all have taken a few of those things like you and I were talking about before we started recording, but would you elaborate a little bit on how even those systems have helped your team, in planning, but then just functioning so in a way that you're prepared for growth, like we were talking about?
Yeah. So all of those different systems have their advantages, right? And it doesn't matter which one you use something. If you have a background in planning, then build your own. There's a bunch of stuff you can buy right off the shelf. The EOS, from Traction, the Entrepreneur Operating System. I'll say Geno's is usually for smaller places. Whatever your operating system is, it doesn't matter. The key thing is getting it written down and in a place to where multiple people can see it. There are systems you can buy that have that collaboration. We have our strategic plan, which is a written document. And then we have Smartsheet for our operational plans and our performance enhancement plans, which is basically a tactical level plan for the individual contributor on the team that kind of nests everything going down and everything going back up. And what I mean by that, and this is where a lot of organizations stunt their growth, because there's a lack of integration amongst individuals, departments, and overall the organization. And that lack of integration causes friction. And what do we know about friction? It slows everything down. So when you nest everybody's plan with not only the higher level plan, but then you look at the top and the high level plan nests with the lower level plan, you reduce friction, which allows you to go a lot faster because you're not wasting resources. And resources are not only money and I don't know, if you're a widget maker, right? You've got raw materials that could be wasted. But if you're in the knowledge game, people's time, right? Like that's the currency that you trade in. And the more all of your team is completely aligned with one another and rowing the boat in the same direction, if every single one of those oars hits the water and goes in this right direction, you're going to be able to grow a lot faster and a lot safer.
Love that. And just how you brought in the strategic plan, the smart sheets, how you all do some of that. Anything else internally you all use to ensure everybody's on the same page or to encourage the integration, right? So there's less friction.
Yeah. So one of the things we just did is we implemented Microsoft Teams. That's a really good program to integrate a bunch of different stuff. There's Slack, there's Zoom, and everybody, there's a million different ways to do this. We chose the Microsoft environment because our email's hosted on there. We actually don't use Zoom anymore. We use Microsoft Teams for everything, for our video calls and everything. And it integrates with our holistic atmosphere. And is that interface as good as something like Slack? I don't know, but it was one of those things with the integrations across all the teams. It's a really good platform to make sure information is being shared across multiple mediums. So Spartan, between our headquarters and our property teams, we're approaching 100 people. Email doesn't work, and neither does text. Neither one of those things are a way to share information. It doesn't work. It's too hard. It's too hard to search. So if you're getting to 10, 15 people in your business, you should probably look at some sort of communication system. Slack, Zoom does have channels on it, MS Teams, something that's outside of email.
Yeah, no doubt about it. We use Slack, and yeah, it's a must. Something like that, like you're talking about. Speak to also like meeting cadences, how you all communicate really internally, but even how often, maybe types of meetings. I know some of that. I know EOS, some of that scaling up goes into some different types of meetings as well. What types of meetings are you focused on, Scott? As say the CEO versus even some departmental type meetings that are happening, throughout the organization.
Yeah. So our meeting cadence is similar to EOS. We have a monthly meeting where it's about 4 hours. And then we have weekly 1.5-hour meetings for our leadership team. During that second half of that monthly meeting, we bring our next level leaders in so that all of the leaders are kind of engaging. Quarterly, we do a 2-day planning session, and annually we do a 3-day planning session at the strategic level. Then as it goes down to the operational teams, they meet as teams every week. Kind of last 7, next 7, as far as like, hey, what did we accomplish in the last 7 days? What's the next 7 days? And then as leaders, we try to make sure that through the reporting structure, our subordinates, we meet with them once per week. That's where that's a little bit different than a lot of companies. We have a 30-minute meeting I do with all of my direct reports, and it cascades down all the way through the organization that even like our teams are meeting on a fairly regular basis. It's one of those things. It's probably a little bit arduous in that regards, but if you're going to grow really fast, man, you can get a lack of understanding really quick. And as long as you have structured meetings, and that's as simple as having an agenda and kind of a desired end state, they can be really productive, and they don't need to be very long. I automatically have mine set to my standard time as 30 minutes. And then the other thing I do that I found with a really stacked calendar, we use Outlook. And with Outlook, you can tell it to end 5 minutes early for a 30-minute meeting and 10 minutes early for a 1 hour meeting. That way, like, you at least have 10 minutes at the end of an hour meeting instead of having them stacked, and then your day gets late. So I use that very much so. That's a little bit of a time management hack to make sure I'm not late to other stuff.
Awesome. I appreciate you laying out all the different types of meetings. I'm going to go back and listen to that myself. I didn't get all of that down, but it's so important. But I wanted you to, because oftentimes people say, well, what do you talk about during those meetings? Or what do you know to focus on? Or do you have, or maybe you can help the listener and myself think about, even let's focus on, say, that 30-minute meeting every week. And maybe the listener is hiring their first person, or maybe they have 5 people on their team and they're all reporting directly to them. I do the same thing. So I meet with majority of our team individually every week at some point, and some of them more than once. But, during that 30 minutes, how do you keep focused? Who brings the agenda and who leads that conversation?
So for the 30 minutes, 3 questions. How are you doing? What's a hurdle? What resources do you need from me? 3 things. And
they know that ahead of time and bring that?
Yep. Yeah. And then if there is a performance issue, we'll talk about it. We don't wait for the annual stuff. I encourage everybody to not do that. It's silly. It's absolutely ridiculous to make somebody wait a year doing something stupid that they may not know. Talk about it every week, do on-the-spot corrections. And that usually happens in there too, if needed. Otherwise, it's those 3 questions.
Yeah, no, that's so helpful. I just hope the listener will think about that. But it's helpful too that this person or that's reporting to you, they're thinking about this ahead of time. They're coming up with this. I'm sure it'd even be helpful if they would send maybe some notes to you ahead of time or something before the meeting, if it's something you need to talk about in depth, right? That's
the most
great.
important thing out of that meeting is that your team feels like they're supported by their leader. That's those 3 questions.
Love that. All right, Scott, a few quick questions here at the end. I wonder, where Spartan is as far, where you're thinking as far as, predicting the market, right? The next 6 to 12 months in the real estate business, are you all buying, selling? How are you all looking at the next 6 to 12 months?
Yeah. So, we're still buying, right? The self-storage industry is a little bit different than the multifamily industry, different than the office. We have the ability to move our prices every 30 days. So we have very elastic pricing. So we can track with inflation and we can track with the interest rates movements. It's definitely getting difficult for sure. So we're constantly monitoring it, and our deal flow is slowing down for sure. Not by choice, just because it's getting harder to make the deals work. I think we're not special snowflakes in that regards. But there's still a lot of things that are trading, right? And there's more capital coming into the space, and there's a lot of opportunity. Our plan is to buy $400 million this year. Right now in various states, this thing will launch in 30 days. So hopefully this has changed. But as of right now, we're under contract or LOI with about $100 million worth of stuff. So it's a little slower than what we thought of kind of out of the gate, but that's just the changing operating environment. Kind of going back to, something I said, be prepared. You got to have, it just depends on how you create value in your particular deals. We're going to look more towards building, since we have a construction company inside of Spartan. Development's going to be a big thing for us because there's a little bit more margins there, a little more risk, but more margins. And we're just going to kind of keep adapting and adjust as we need to.
That's awesome. What about your best source for meeting new investors right now?
It's still the in-person meetups, whether it's at a conference or whatever. Those have the fastest flash to bang. Somebody meets you, they go on and then they do whatever. That's a faster kind of decision cycle than, say, on a podcast or something like that, because it's the podcasts and the digital medium and all that are definitely 100% kind of shaping operations. But the decisive operation is meeting somebody in person, because there's just the video is great, but we all know that there's no replacement for sitting down and having a coffee with somebody.
What are the most important metrics that you track?
So for what level of the organization?
I asked that way on purpose. And so I would just say, for Scott, for your position, CEO, what are you tracking? And you could relate it to personal or business.
Yep. So one of the key kind of property metrics I track is our gap between physical and economic occupancy. That gives me some pretty good insight as to how we're doing with our collections. Conversions, for how many leads we actually convert to active customers. That's on the property management side. Cash on hand from our finance team. Don't run out of money. period. None of the other metrics really matter as much as cash. Don't run out of money. That's basically my main thing. How you're doing as far as the other financial metrics, that's really fantastic. Those are really good metrics. If you're growing super fast, they're always going to be changing. So as long as you know that you have cash in the bank and you can make payroll, that you'll be safe. Acquisitions, number of contracts is one of the things I track. I'll be honest, I don't care how many deals they review. That's not relevant to me. It's number of contracts, not LOIs, none of that stuff. It's number of contracts. And then from the construction side, number of on-time completions, on-time, on-budget completions, because that shows me how we're doing in planning for our construction team.
Nice. Yeah. I heard a guy say the other day, without cash, you crash.
Yeah. That's it. Simple. There's a million other metrics, but it's just, those are kind of from around the business, right?
What about a daily discipline or numerous that have produced the highest return for you?
Using a full focus planner. That's a brand. If you want to strike that from the record, fine. But using a planner every day. I choose the full focus. It's one that's most in line with me. There's a gazillion of them out there, but I started that, I don't know, maybe 3 years now. And it's a game changer.
That's Michael Hyatt. Is that right?
Yes. Yep. Michael Hyatt. I don't care how smart you are. You're not going to remember everything, period. Just not going to happen. So just using that planner and having the discipline of having that thing with you, like that's huge.
Love that. Well, do you do that digitally or do you do it all manual handwriting?
Manual. I don't like the digital planners. And this is why. Number one, I'm a Luddite. So we'll put that out there. And then number two, anything digital has the means to distract you away from your primary cause. Some people are like, I take notes on my phone. I'm going to call you out and say that's garbage because I bet you 50% of the time when you're taking notes on your phone, some red dot or a text message distracts you away from what you're doing at least 50% of the time. So shenanigans. Some of our team is using the Remarkables. Mm-hmm. That's a digital means that is less distracting of say your phone or whatever. So I think that would probably be all right too.
Yeah. Remarkable. Yeah. I have a thing called a super note. It's very similar to that, but it's not connected right to the internet. There's no notifications, no things like that popping up. Appreciate that recommendation. And what about number one thing that's contributed to your success?
Discipline. So Jocko Willink, discipline equals freedom. And he's right in that regards. If you have discipline in kind of where you're going, you have a lot more freedom, and that's it. I'm a creature of habit. I get up at 4:30. I get into the gym at 5:30-ish or whatever. Most days, I'm really disciplined in what I eat so that I sleep really, really well. And just having that discipline allows me to get up and really kind of get after it and not be tired and not be foggy.
How do you like to give back?
Coaching and mentoring. I'm not really a belief in giving money. Doesn't do it for me. I like to look in the eyes of somebody that I'm helping. So that's it. I do, I don't know, maybe 1 or 2 calls a week from transitioning military members that are asking like, hey, how do I get into real estate or whatever? And I try to mentor, and I've got a thing, vets, pets, kids. The only thing I focus on. Everybody else, like, sorry, those are my 3 things.
Love that. Scott, always a pleasure to catch up with you again. Incredible to see your all's growth. And I know so much of that goes back to the discipline and planning that, man, you just push so hard on and have been trained in. I mean, the military, I think, just does that to so many of us. I'm thankful for that part. It's like how they instill that in you. But just the discipline of planning and how you have stressed that to us today, but, in conditioning for growth. It's interesting how we have grown, and man, you got to learn a lot more about planning in business as you grow, right? There's more people reporting to you. I mean, that things change, right? And you have to be thinking ahead of those changes if at all possible, right? And you've helped us with that today in so many ways. I even love how, we got into the meeting cadences and how you all structure those. That's so helpful. Because I think many of the listeners, if they don't have somebody working for them yet, they need a virtual assistant of some kind, right? Most likely to get some of these things off their plate. And even just that 30-minute weekly meeting where, you laid out those 3 questions, so helpful. Oftentimes you get started and think, man, what does this meeting even look like, right? So thank you again. Tell the listeners how they can get in touch with you and learn more about you.
They can head to our website, Spartan-investors.com. My email, scott@Spartan-investors.com.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.